Thanks, Chrissy. Rivers Gold, I'll keep it nice and short. It's a company that's been around. It's a story that we've turned around recently. So basically the message is quite simple. We are in WA looking for gold, and we are 50 kilometers from Kalgoorlie with a pretty special piece of ground. The usual disclaimer, I won't read it to you. Mike tried and failed. So very, very simple. We're refocusing on WA. We've had for a long while an amazing land package in WA, which has seen a bit of work and has a lot of potential, but has fallen on the back burner for a while. To do that, we've refreshed the board and management of the company. We now have geologists on the board, which helps a bit when you're running a junior explorer. And we've also appointed an amazing group of people, and that's quite an innovative way of remunerating them, and quite an innovative way of doing things, and that should help us. That should help us in the near future, and I'll get to that shortly. It's also got that we've got money. I mean, gold explorers at the moment don't seem to find it too hard to find money, but we do have plenty, and we have way enough to get us going soon, to get us going in the next few months and get our boots on the ground and get working. Now, quick corporate snapshot. Current share price at I think it's a bit higher today, but 386 million shares on issue. Market capitalisation at 22 mil. Pretty strong register. Top 20 has more than half the shares. We've reduced the size of our board. We're running it lean and mean. It's only 3 of us, 2 geologists, geoscientists, and it's all about spending the money in the ground, making discoveries, more than anything else. Cash, as I mentioned before, we do have $2 million in the bank, and we have sold or partly sold our Alaskan projects, and in the next 12 months there is cash coming from that transaction as well to help us finance what we're going to be doing here. Now, I said the appointment of high caliber people and an innovative way of paying them. Myself, so I'm a geologist, I'm an exploration geologist. I went for a short while in the world of broking, learned a lot out there, but it's much easier to be looking for gold in the gold fields than being in the broking world for a geologist like me. The consultants we have, Simon Bolster, the name will speak to a lot of you. A regolith expert, has done a lot of work in WA, done a lot of work in West Africa, looking for gold undercover, looking for gold under regolith, and finding a lot of gold in the process. Pete Williams, ex-head of geophysics at WMC, and that's the bit that's going to come very important soon in the presentation. Been around for a long while, very experienced, and was part of the WMC team who was working on St. Ives and the camp and work under the Salt Lake back when the big deposits were being discovered. Marat Abzalov is one of those polymath, knows geology, but also knows mathematics, geostatistics. He's an absolute 3D nutter. And if we find anything, and if we have anything in our drilling, we can be sure that we'll be targeting the right extension or the right infill, or we'll be in the right place thanks to what he does. Now, I'm going to brush quickly on, before we come back. I've been talking about innovative things. The great deal we've managed to actually seal with these guys is that, and I've been talking to a lot of you about it, we're not paying them, we're not paying them cash at the moment, but they're remunerated on discovery hurdles. So I think we have a pretty sweet deal. They get a sizable chunk of the company, yes, but they get that if they find us 500,000 ounces of gold in JORC compliant resource, which means that where we are in the goldfields, given the proximity to all the plants, that 500,000 ounces is going to have significant value, and we can then start paying them. Now, projects, that's a world map of projects. I'll go very quickly through this one because the focus nowadays clearly is Western Australia. I'll brush on the rest towards the end of the presentation, but WA. Well, first of all, because we can go there, that's quite easy. And also because given the tenement package we've got out there, there is so much to be done. There's so much to be discovered out there. And the value of any discovery out there is so much higher than anything else that we might as well focus there. Refocusing on WA, the Canalpi project is 1,050 square kilometres covering 100% greenstone belts from the Northman Wiluna greenstone belt. I mean, it's just, I mean, you can see large tenement packages, you can see, as people call it, moose pasture. Well, that's nice. The thing is, if you have tenure, you want also to have the right rocks under. And if you have a large tenement package that has been done to death, which has happened and does happen, well, the chances of discovery are quite low. We have a large tenement package with very little work that's been done on it. So basically, all the ingredients for discovery potential, and that's all we're after. Now, discovery, it's nice to discover gold. It's even better if it's a significant discovery. Now, again, back to the size of things we've got, back to the work that's been done historically. We believe that we're going to be looking for something significant. I mean, we'll take anything we find, and don't get me wrong. Again, having been in exploration for long enough, you take whatever you find. But we have potential out there for something large, something nice and juicy, and we'll try hard to find it. Now, all the ingredients are there. We've got the right project area. We've got the right rocks. We've got what I believe is the right team now. We've got really good people looking after that really good ground. The timing can't be much better. I mean, pretty much everyone in their presentations has been saying the same. With the current gold price and with the near future with quantitative easing, we can see very good times for gold. And you also need one thing, some people seem to be forgetting it a little bit along the way. Having worked for a broker, you never forget about that thing. You also need to have the right register. You also need to have people behind you who understand what you're doing. I mean, it's good when your shareholders, who after all own your company, are following you in what you're trying to do. And we do have all of that. Now, there's a quick word here on salt lakes and the new frontier in exploration. A sizable part of our ground is actually under salt lakes or salt flats or the salt plains. And if you look at the rate of discoveries over the last few years in the gold fields, I mean, there has been discoveries under the salt lakes. It's pretty clear. I mean, the geology doesn't stop at the lake boundary. It was just harder to get there, sometimes difficult to get permission to go there. But clearly, all the latest sizable discoveries have been made under those salt lakes. Now, I was talking about an inviolable land position. When I started, and I got, it's interesting. You see that the tenement package, 1,050 square kilometres, and it's just great. I've got a big playground. That's good. What does it really represent? Well, it represents, in terms of land package in that part of the world, it's huge. It's big. I mean, you look at the neighbours we've got and their tenement packages, for some of them, tenement packages that have been accumulated over decades. And you see the size of what we control at the moment, and it's a bit daunting because it's big. It's a large area. But it also means a large area with the right rocks, higher chances of discovery. Now, I'm going to go through a few of the brownfield, let's call them brownfield projects we have. Importantly, about 600 square kilometres of the whole tenement package we control has never been explored. When I'm saying never been explored, not that we know of, not that we can find traces of. So there's no records of anything. And in some areas, I mean, we've got a team on the ground now. And no later than a few days ago, I had a photo sent through mobile phone from one of the fieldies saying, "Oh, is that any good?" It's just like, well, sheared mafics, carbonate alteration, sulfide casts. Yeah, it looks all right. Where did you find that? Just where we camped. Okay, good. We'll take that. That's going in the lab soon. That's the level of work that's been done in some of that tenure. Now, we do have other projects, and that will probably satisfy the more demanding part of the market who would like to have more results and faster. The first one being Queen Lepage. Now, Queen Lepage is under a salt lake. It's under Lake Indalguda. It's east of the Bulong nickel refinery. We're 60 km from Kalgoorlie. The Queen Lepage open pit, the historical pit that produced 10,000 ounces at just shy of 10 grams, is just north of where we are, along strike, along the Randall Shear. And in 2019, Rivers Gold and the former team at Rivers Gold went and drilled their core out there with pretty spectacular results. I mean, when you're looking for gold in a depleted environment, depleted because saline environments dissolves gold. There's natural depletion in those salt lake environments. When you start hitting 1 or 2 grams in air core, that is quite significant. And to give you an idea of the size of the sampling and the size of the project we've got, this is our drilling on the right. It's our drilling at Queen Lepage, and on the left, I've actually superposed our drilling on the existing St. Ives camp. And you'll realize that the spacing we have on those holes could actually miss half of the St. Ives camp. So this is an extremely exciting target. We're going to go and drill that as soon as we can, which is probably when there's a bit less water in the lake. Now, salt lakes and discoveries, that's where Pete Williams is actually coming in the game. He was head of geophysics at WMC when WMC was finding gold under the lake at St. Ives. We've got him working for us, and he's designed a lot of the program. That's where we're at now. The testing targets is going to be next quarter, when we can access on that lake, when we can get our hands on a rig to go there, and when we can drill it. Now, another couple of projects, nice, high grade, interestingly, still open after all those years. Cutler, 10 meters at 11 grams. That definitely needs follow-up, and we're going to be doing that soon. Far Jones, same deal, 3 meters at 17 grams, open in all directions. Strangely enough, no soil sampling 100 meters east of it, no soil sampling 100 meters north of it. So we're out there doing that now and sampling there. Jaws, the same beef that hosts Santa and Maxwell's, under a salt lake. There again, there has been a bit of historical work done there, but we'll go there and work on that one. So we're in the field, we're working now, we've got soil sampling teams out there, we're generating more targets, and we'll be working them through the pipeline, advancing them, drilling what needs to be drilled. There is a huge greenfields potential, and there'll be a little bit more coming in the next few weeks. That conference was a little bit early for us. Results are coming soon. Keep an eye on that. There's going to be good news coming out of it. And the other projects, brushing very quickly, a few seconds. Alaska, we've sold it, retained a 30% interest, so any discovery out there will still be exposed to it. South Australia, we have actually relinquished some of the tenements we have out there. We're in talks to get some help drilling deep holes. And look, I'm not going to mention Cambodia, which has been stuck in a rut for a fair while. And that's it.
Thank you very much.
Everyone, welcome to Alltech Chemicals. We're an Australian company. We're listed on the Australian Stock Exchange as well as the Frankfurt Stock Exchange. And our vision is to build a 4,500 tonne per annum high purity alumina plant. So if you remember your chemistry, alumina is aluminium oxide, and we are intending to make a product that is 99.99% purity, very pure material. Why is that important? Because today, sapphire is produced in the Earth's crust at extreme temperatures and pressure. And the sapphire is a blue color because of impurities like iron and chromium that create that blue color. But today, mankind makes synthetic sapphire for your watch faces, your camera lens on your phone, LEDs and so on. So it has to be crystal clear. So you actually have to use high purity alumina as your feedstock. And this is very important. So how does that compare to smelter grade alumina that Alcoa produces? Well, that's about 99.7%. It looks pretty pure, but is not pure enough to make synthetic sapphire. The product that we're going to produce can range from 15,000 US dollars a ton to 50,000 US dollars a ton based on the quality. So it's a high value material. Now, the industries that are driving the growth of our product is in the LED industry. So LED is a light emitting diode. It's actually a semiconductor. Now, what they do is they buy high purity alumina, they heat it at 2,000 degrees, it melts, and they grow a single crystal of sapphire. It looks like a big ice block, nearly as hard as diamonds. They core it out using diamond cores, slice it up into wafers, and that's the sapphire wafer for the LED. Every LED has a sapphire wafer substrate. That's what they look like, extremely hard. They put chemicals on it, and they put electronics on it, and that's the building blocks of LEDs. Now, you know the LED is sweeping the world today because it uses 1/6 the amount of electricity, and it's really going through the world, except the US, where Mr. Trump's taking it back. So that's the LED industry. So the other use of high purity alumina is in the lithium battery industry. So as you know, in lithium batteries, there's a positive and negative electrode, and there's a separator that keeps them from touching. Because if you're positive and negative touch, you get a thermal runaway, and the battery catches fire. Now, these separators can withstand up to 130 degrees. Now, today's batteries are getting hotter and hotter, and so these separators tend to shrink and becomes a battery problem. So they found that by coating these separators with high purity alumina, it maintains the integrity of the batteries, and really it's the use going forward for batteries. Now, this is a graph that shows the energy density of the batteries going up. So that's the red line going up, and the cost of batteries coming down. So that's good, because in the end, for an electric vehicle, you want a decent price for the batteries, and it can last for many kilometers before you have to recharge it. And these separators that keep those anode and cathodes, they look like that. They can handle up to 130 degrees. But you know how hot your batteries are getting? You only have to leave your iPhone on and you can feel the temperature of it. Imagine that in an electric vehicle. So these separators tend to shrink, but by coating it with high purity alumina, they can handle up to 300 degrees. So what's the forecast for high purity alumina going forward? Well, roughly about 30,000 tonnes per annum is used every year, but it's expected to climb to 270,000 tonnes by 2028, by 2030. Exponential growth looking forward. Now here comes the key to our technology. So these are the current producers of high purity alumina. They're established producers, Sumitomo Chemicals, Sasol, Bukowski, etc. Now, how do they make high purity alumina today? They can't use the smelter grade alumina that's around. They have to use aluminium metal as their feedstock. They dissolve the aluminium metal, they hydrolyze it, and they make alumina. Now, where does aluminium metal come from? It comes from the bauxite industry. So they extract bauxite, they make smelter-grade alumina, they sell it to the alumina refineries, they add a lot of electricity and costs, and these guys go back to alumina. So my question to you is that if you have technology that can actually bypass the aluminium metal stage, go straight from the ore to the alumina in one single step, will you be disruptive to the industry, and will you be the lowest cost producer? So essentially, we got that technology. We don't go from bauxite, we go from kaolin. Now, kaolin is a highly weathered material. Basically, Mother Nature has removed a lot of the impurities. They use kaolin as a whitening agent in paper, ceramics, etc. That's our feedstock. The Meckering deposit is where we have it. The project is approved, it's ready to go. And we only need 50,000 tonnes of kaolin every year. It's a free dig, and then we go into a loading operation. Now, the plant itself will be transported, the kaolin will be transported to Malaysia in Johor, and this is where we have our site. Right across the road from Singapore, it's an industrial chemical park. We have access to hydrochloric acid, electricity, natural gas, and all our product goes out to the world from there. And the best part is that we also get a tax incentive where we don't pay any corporate tax for 10 years. All right, the technology itself is very simple. We take out sand in the first stage, we leach the kaolin in hydrochloric acid, we purify the aluminium chloride, and then we produce the alumina. Now, if you put it all together, it's actually a very simple process, right? But actually, if you Google kaolin to alumina using hydrochloric acid, you'll find that the Swiss came up with a technology in the early 1900s. So the chemistry's been around. The US government did a lot of work in the 80s, but there was no demand for high purity alumina in the 80s. There were no lithium batteries or LEDs around. So because of the demand today, companies like us use the same chemistry, our deposit in Meckering, and we can make high purity alumina at a third of the cost. So this is an independent study. We have about 9 patents on the process. This is an independent study that shows we're about a third of the cost. So why are we so cheap? Well, essentially, we don't have to buy aluminium metal. We have alumina in the ground for free, and it's just really the cost of extraction. We also recycle a lot of the acid in the process, and that really brings the cost down. Okay, so we are also a green project. So recently we've been accredited as a green project. For every tonne of HPA, we use 46% less carbon for every tonne of HPA. So consequently, we are moving towards getting green bonds for completing the financing of the project. And if you count out all the HPA that we produce and it goes into LEDs, that will save something like 77 million tonnes of CO2 by the use of LEDs. On the offtake side, we have a 10-year offtake deal with Mitsubishi. They will buy all our products and sell it to their customers. As you know, in Japan, a lot of the chemicals are bought by trading houses and then sold to their customers. It's a 10-year offtake deal. On the construction side, we've managed the risks. We're working with a very large German company called SMS Group. They turn over about 3 billion euros a year, and they will give us a fixed price turnkey contract. This is all pure German engineering because you're dealing with very fine, high purity materials. So it's a fixed price, and they will guarantee throughput, process, and quality. Okay, very hard contract to get in these days, but these comes with all the guarantees. The plant is designed by SMS Group in Germany, a lot of European gear, hardly any Chinese gear because we are chasing 99.99% or 100 parts per million of impurities. The economics, the DFS or the feasibility study shows that it generates an NPV of $500 million US. It generates 76 million EBITDA every year at its full rate. Payback is roughly 3.9 years. And the cost of production is about $8.55 a kilo. And in our models, we're using about $27 a kilo. So the economics is very strong. We've got 190 million of financing closed. That's a loan from KfW for 190 million, of which 170 million is export credit finance. So that's already been closed. We're chasing down now 90 million mezzanine debt from Macquarie Bank. And Macquarie have done all their due diligence and they've come back and said, look, we want some of the offtake at a fixed price to manage the risk on the pricing. So we are working on that. As I mentioned, we're looking at green bonds as well. So if you look at the total use of funds, we are targeting 390 million US, of which 190 million is from the KfW loan. SMS has committed to contribute 10 million. The mezzanine debt from Macquarie is 90 million, and we're looking at project equity of 100 million. So essentially, to get that 100 million, we're going to sell 49% of the project to either a strategic investor or a company called Alltech Advanced Material, which is listed on the Frankfurt Stock Exchange, and we intend to raise that money in Europe. Why is that important? Because there's a lot of money in Europe and there's a lot of focus on green projects. So, as I mentioned, AAM has an option to purchase 49% of the project if we raise 100 million. We're also working with UBS and looking at green bonds and so on. So rather than wait for all the financing to finalise, the board has taken the decision to start the construction process. And that essentially takes out some of the risks around a greenfield site. So in any site, there's always a risk of ground conditions, getting on site with permits, environmental permits and so on. We've raised 40 million in the last 2 to 3 years, and we've commenced that process. We've opened the site, we've started clearing the ground, the first steel has gone up, and we've built the maintenance workshop, which we will use in the construction process. And we also now finished the substation, one of the key items on the timing, the risk timing. Some underground tanks, and so on. So this really de-risks the project. We know the ground conditions, we know the contractors, and once we finalise the funding process, the project will ramp up very quickly. About 18 months to 2 years in construction, and the first product out after that. Our focus is also in Europe. I don't know, with COVID, it sort of slowed us down in the financing side, but we think that from COVID, people will be less reliant on materials from China. I know a lot of the European companies, car makers, are wanting to have all their materials in the chain coming from Europe. We think this is going to play in our hands. This is an example of how much lithium battery plants are being built in Europe today. And if we had to build a second plant, we would position that in Europe. And we have now an option to purchase a site in East Germany, but not very far from Tesla's factory near Berlin, and a lot of the EV manufacturers down there. So in summary, thank you very much, ladies and gentlemen. High purity alumina really is a right commodity. We're in the right place and right time, and we have the right technology. So thank you.
Iggy, thank you very much.
Thanks, Chrissy. I appreciate that introduction. Thanks for having us the opportunity, and I understand this is a live feed, and hopefully we've got some friends and very patient supporters in Germany and Singapore listening to us as we speak, so certainly welcome them aboard. I'd like to introduce the company, Matsa Resources. The company itself, obviously it's ASX listed, the code is MAT. We recently did a capital raising, so we now have 271 million shares out on issue, which I'm sure you'll agree with me is quite a very low number of shares for a company that is actually producing and actively exploring at the same time. Our market cap is $36.6 million as at today's price, and I will argue it's very, very low and can only go up, and that's what we're going to try and achieve. Our significant shareholders are shown here. Top 20 shareholders control 54% of the company. JP Morgan's 13.88% of the company, which is a conglomerate or grouping of German shareholders. They do trade us on the Frankfurt and Stuttgart secondary boards, and they are the total of that. BNP Paribas are our Singaporean supporters. They now control 12% of the company. Deutsche Balaton is an institution. It's quite a well-known institution in Germany, and they have been participating and joining in with us, and they now have 8%, as if HF Resources and myself. You'll see that I've put a bit of money into the game, and I've certainly got the skin where it counts. 3 directors, myself, Frank Sybil, and Andrew Chapman. We've been together since about 2010-11 and staying together very firmly. Why invest in Matsa? That really is the question. Well, I think I have the answer. And the answer is because we're on the move. There is upside in production and there is strong upside in exploration. And I think that's what the market wants to see us do. So we're concentrating at Lake Kerry Gold project. It's in Western Australia. We believe Western Australia is the premier place to have exploration and or mining activities. From a political risk, it's very, very low, it's very safe, and we've had a very good run with COVID-19, which we hope will continue. We are surrounded by very high quality gold mines, Anglo Gold Ashanti, Sunrise Dam, Goldfields International, Granny Smith, to the south of us is Saracen. We have got a dedicated and sure pathway for 2020 into 2021. We are mining at Red October. It's an underground mine. We do have a feasibility completed with Fortitude Stage 2 mining. As you can see there, our forecast budget at $2,150 per ounce demonstrates just under $22 million profit in 22 months. Now, if you extrapolate that to today's gold price, that comes into between $55 and $60 million profit within 2 years. That mine is fully approved, ready to go. We intend to increase our gold resources at Red October, at Devon and Fortitude North over the next 12 months through a very aggressive drilling campaign up to the value of about $5 million. Matsa today has $10 to $11 million in cash and liquid assets, and we're going to throw that at exploration, we're going to throw that at drilling, and we're going to grow our resources. So what are we? Are we a producer or are we an explorer? Well, I say we're both. I say that we will get an enormous amount of uplift if we have success in exploration, but we will also have uplift if we can continue to ramp up our production, and I think we can achieve that. We've got several options to increase our production through Red October, Fortitude and Devon, and you can see there the number of exploration opportunities we have. So running through it very, very quickly, we do have proven mining capacity. We've already mined 2 smaller pits. We've done a trial mine at Fortitude, which we called Stage 1. That's now ready for Stage 2. We are doing mining studies at Devon. But our fundamental important asset that we have right now is our relationship with Anglo Gold Ashanti. We have got a very detailed memorandum of understanding, and we share knowledge, we share problems, we share their mill. We have a 5-year ore purchase agreement in place. That's now been running for just under 12 months, so there's another 4 years left to go. We've had a fair bit of experience over the last 3 years with them, in fact, so we know each other, so there's no risk to a relationship there. But Matsa in itself is becoming recognised as a regional player in the area, and we will hammer that home. So talking about Red October, it's 550 metres deep. We started mining there in June 2019. We had to do a fair bit of development. We had to get access. We had a good September 2019 quarter. Our December quarter was okay. Our March quarter was fairly low because we had to develop access to the stopes. Our June quarter was the first time that we actually produced what I call a good result. We averaged about 1,000 ounces a month. We will continue to do that, I think, for the next 6 to 9 months, and then we plan to ramp up. I am hoping we'll go to 2,000 ounces a month, then 3,000 ounces a month. And I think you'll agree with me, a company with a $35 million market cap producing 40,000 ounces doesn't make sense. It has to go up. We are drilling at Red October as we speak. We started on the 26th of August. We have now drilled in the lionfish area, which is signified in that area, and we are drilling down at the bottom of the mine. We will release to the market some good news tomorrow with what we are seeing in that core, although we do not have any assays as of yet. Stage 2, Fortitude, is, as I said, we've done a feasibility. We can call this a reserve of 54,400 ounces. We have done this optimisation at a gold price of $1,750. We are very confident that if we optimise this at 2,650, there will be more tonnage of ore to be mined, and this will probably be the subject of an ore purchase agreement, either with Anglo Gold or someone else. Those discussions are ongoing, and we are looking at our options. But we're also an explorer, as I said, and this is where I think we will get a lot of fun. I think we will develop a fantastic opportunity to increase our resource. So Lake Kerry's 563 square kilometres. I have said it before and I'll repeat it. There's a fair bit of lake in our ground, but that to us is a huge advantage. Previously, if we go back 10 years or further, it was very expensive to drill on the lake. You had to build causeways. There was a lot of environmental damage. There was a lot of problems, and it was time consuming. Nowadays, all of that is gone. We can use specialised lake rigs. Costs about 20% more than conventional rigs for diamond drilling, which is not prohibitive, especially with today's price of gold. So we will commence drilling at Devon, and then we will go to Fortitude North. So what we have done of late was we've prioritised our targets. We have determined where our significant and easiest resources can be found. So in this, Red October is not included because that's part of a mining arrangement. Neither is Fortitude. Fortitude North is a very interesting area that we want to explore. We've explored 800 metres of a 1.5 kilometre long target. We're getting some quite good assays from our drilling. We've got a supergene mineralised zone, and we've also got fresh rock mineralised zone. Devon Mine. This is a very unique situation which we were able to put together, and I will expand on that, as with Hill East and Olympic. I think one of the things that I really want to stress is many people are getting confused with the number of targets we have. All of these targets that I'm talking about are within the Lake Kerry project area. All of these targets are within 14 kilometres of each other, but they are individual mineralised zones, or deposits, if you like, in the case of Fortitude and Devon. They are discrete, they are individual, and we can bring them on tap at different times. So the Devon gold mine itself, I won't read out these results, but you can see them for yourselves. Some of them are quite impressive. GME Resources did a small pit there. They mined 47,000 tonnes at an average 5.3 grams per tonne. That's an open pit. We think that there is continuation of that. We think that it's open at depth. We feel that this will also go into an underground mine. What we recently did is we spoke with CSA Global, asked them to tell us what do they think is there, and we're getting figures of 100,000 ounces, potentially 200,000 ounces, and I'll come back to that. The Olympic area is about 700-800 metres to the west of Devon. Whether it's part of Devon or something separate, we don't really know at this stage, but it definitely deserves drilling, and I think we'll get some impressive hits out of that. Again, you can see it's open at depth, it's open at strike, and we will find that. The reason Devon is still there, and it has not been explored correctly, is you'll see the blue areas. They were mining tenements. You will see the green areas. They were owned by a different company. Now, there is no way that the owner of the blue area, which was GME, could drill underneath the pit or along strike if it did not have agreement with the company that owned the green areas. What Matza was able to do is buy both companies' interests out in the entire area. Now Matza owns 100% of the complete area. We have no impediment to drilling in between, along strike, to the north, to the south, or to underneath. And that's exactly what we're going to be doing. My understanding, and I've got Dave Hilding here today, he's our Group Exploration Manager. We've got rigs going on the 23rd of this month, and they will be starting a quite good drill campaign at Devon to determine what do we actually have there. Fortitude North. This is about 7 kilometres north of our Fortitude gold deposit, which is about 8 kilometres east of Devon. This is the mineralised zone where I said we've got a 1.5 kilometre long anomaly in the supergene and the fresh rock. We have drilled about 800 metres of it, and we intend, after we finish drilling at Devon, to immediately go into here and drill the other 700 metres. We want to find out what is the extent of this deposit, how much gold, what is the potential of this area. So what I present to you here is the next 12 months worth of drilling. You can see we will have 2 rigs, one at Red October, one at Devon, then going to Olympic, then going to Fortitude. And what we hope to be able to uncover is somewhere between 670,000 ounces to 1.3 million ounces of gold on top of our 441,000 ounces that we currently have in as a resource. So I think I can confidently say that if we achieve anywhere near this type of resource growth, that depreciation must occur in our share price. That is on top of any potential growth that we have in mining. Ladies and gentlemen, this is our company. We're very, very proud of it, and we will make this happen. Thank you.
Thanks for that introduction. So Prodigy Gold has a very large land holding in a premium district, gold district in the Northern Territory. We're up in the Tanami with the likes of Newmont and Northern Star. This is true greenfields exploration, areas that only have geophysics, or if you're lucky to have soil sampling out there. Many of the tenements do not have a single drill hole, so it's true greenfields. Many of the targets that we are drilling are soil anomalies getting drilling for the first time. The shallower targets and the areas that we have empirical support for the targets, we've kept those as 100% targets to progress ourselves. As we had more than 5 years worth of targets to drill up there, part of our strategy is to do joint ventures with the right partners to bring forward discovery. We have 1 million ounces of resources on our books. We're looking to rapidly add to that. A part of our plan is to fund ourselves through monetizing the smaller of the resources, and we've done that through an operator agreement with TRL Tanami, which is helping to top up our cash balance on those using those resources. So the joint ventures that we've done are the very early stage targets, or those targets which are undercover, which are going to be expensive to explore. We've done those with Newmont and Newcrest. And down to the south in the battery metal space and the base metal space, we've got great partners of IGO and more advanced targets down there that we'll talk about. And we are contributing to that joint venture. So $10.7 million cash in the bank. So cash to keep us working through aggressively the targets that we have, and that has been continuing to be topped up through that operator agreement payments through the year. Market cap of $37 million. So looking at the portfolio, our focus is up in the heart of the gold district, the Tanami, and also out to the east and the north Arunta, the first time that we're exploring out there for the last 4 years. Joint venture with Newcrest in blue and Newmont in the green colour. Off to the south is that IGO joint venture. The major deposits in the area are 14 million ounce Cully gold mine, undergoing $1 billion expansion by Newmont at the moment, including their plant. And we're surrounding the Northern Star joint venture at Central Tanami as well. So joint ventures are a $12 million earning for Newcrest to get into 75% of the Euro project, a $12 million earning plus cash payments from Newmont to get into 70% of the Tobruk project. We're contributing to the 70-30 IGO joint venture, and on top of the payments from TRL, we retain a 2.5% royalty on the resource that they're progressing towards mining there. So it's been a challenging year with COVID, a slow start with the border restrictions. We weren't able to get onto the ground until July, and I think we're one of the first explorers out on our land out in the Northern Territory. So we have just completed our first 195 hole air core program, completing about 11,000 metres of drilling. So that's testing the first 7 targets. Several of these have never had drilling into them before. All of those samples are now sitting in the lab, and they'll start to trickle out over the coming weeks, and we'll keep those announcements coming out. This year, we plan to do about drilling of 19 targets. That will be a combination of aircore and RC drilling on our 100% owned projects. IGO had a pretty comprehensive program to progress RC and diamond drilling. We'll go into that a bit more later. That was suspended with COVID, but we're looking at supporting them to get that back in action in the coming weeks. On the Tobruk joint venture with Newmont, in spite of not being able to get onto the ground, you can get above the ground, and they've had ongoing geophysics surveys being completed over some of the soil anomalies defined in the surveys of last year. So we're back out there. The crews are on the ground. All have agreed to stay in the Northern Territory to get this field season completed. So there's no issues with COVID coming into WA and closing down the Northern Territory border, and we'll be able to keep exploring out there. To give you an insight into just some of the targets, there's more information at the booth. Inside, North Arunta, so this is sitting right out on the gas pipeline and out on the Stewart Highway, so quite handy for access. An area that was shed out of Newmont after they'd defined a large number of soil anomalies out here. So if you look at the nature of the targets out here, you've got several multi-kilometre long gold, copper and molybdenum targets that have just never seen a single drill hole, not an air core, not a RAB, not a vacuum hole over them. So we are drilling these for the first time. With the number of targets that we had, this is an area that we'd previously joint ventured, and we got back at the start of the year when the other partner ran out of cash. They did do some drilling out there, got 5 metres at 15 and 9 metres at 11.5, a long strike of where we've done the recent drilling. So that joint venture drilling was at Crota. We've just completed, that's 27 holes. 27 holes at Tulsa, 5 kilometre long soil anomaly. So the first drilling into that target, and there's more where we're getting permits finalised in the coming weeks. Looking back into the heart of the Tanami, one of the focus areas, here we're sitting up around the Central Tanami project and that Kelly project back up towards our resources, 700,000 ounces of resources there. We've just completed 57 holes into a splay off the Tanami fault. Good soil anomalism and rock chip anomalism there that we're going to drill, or we have drilled, and the initial drilling and some of the targets at the Bonanza West target. So to give you insight into just one of those, here we have the Beluga target. It's 3.5 kilometre long soil anomaly, a high grade part defined by rock chip samples that just has not been drilled. So we have completed traverses of RAB drilling across that target to get bedrock intersections for the first time out of it, and that's a part of that 110 holes currently at the lab. Looking at the resources, so in previous years we've had successes in growing the Hyperion resource up to be 300,000 ounces. Up to the north, previously drilled by Ord River before they ran out of money in the district in 2012. It's taken us a long time to get agreements in place to get out there. We now have those land access agreements. We're finally getting the final clearances to get out and do the drilling this week, hopefully, if not next week. And you look at the tenor of some of the results that Ord got before they keeled over in that drop in the gold price. You've got 3 metres at 100 grams, 2 metres at 47, and a metre at 96. So we still have that core. The Tregony was previously a JORC 2004 resource. We want to go and do some more holes before we do a JORC 2012 resource to get that verification. You've got 4 kilometres of gold anomalism, typically drilled to only 80 metres below surface. This is the deepest section. So we're looking to add more of those sort of intersections. The first target that we'll be drilling, though, again, is another large-scale soil anomaly, PhD, 9 kilometre long soil anomaly, sitting out there. Ord did A few RC holes got up to 9 grams in RC drilling in the central 3 kilometres of that soil anomaly before they keeled over. So we plan on doing traverses across the full 9 kilometres of strike of that soil anomaly and try and rapidly bring this to resources. More information about these projects again at the booth. To quickly look at the joint ventures, as I said, IGO is the most advanced joint venture. Great geophysicists down there defined some high quality conductors looking for base metals, copper, lead, zinc. Previously, we've had some pretty high grade results coming out, up to 3% copper, 8 grams gold over thick intervals through there. So we're looking for more of those. Raw and customizable are the names to look out for. Of the total program, these are the strongest conductors. Unfortunately, we couldn't drill them last year with the RC rig. They start just a little out of the range of the RC rig that we had out there. So we need to bring in a diamond rig to test those targets. What Peter Bradford really likes in the battery space is Grimlock. So Grimlock is quite an intriguing deposit. Consistent 1% to 2% cobalt at surface there. High-grade manganese and some interesting nickel numbers as well. So Grimlock's been defined with, I think it's 11 or 12 RC holes over several kilometres now. The plan is to do ground-penetrating radar to define the best areas to go in RC drill. It's going to take 20 metre long RC holes to pretty rapidly drill that target out. So 2% cobalt in a first world jurisdiction that normally you have to get kids in Congo to be mining. So that's the right sort of cobalt to be having for the future batteries. We're working with IGO to see if we can bring forward the drilling of that project with the staff that we already have in the NT. So a big year. COVID set us back by about 6 months. We've completed the first 11,000 metres. Those samples are in the lab. We plan on doing another gold focus campaign on our 100% owned projects before the end of the field season. We'll see if we can slip in the IGO drilling as well before the year rounds up. Great support from the NT government. We've got a target in the North Runter supported by the NT government, 50% funding, and equally at the eastern end the western end of the Lake Mackay, we've got funding from the WA government to do some RC drilling into one of the targets out there. So great exposure to 100% gold with us. Targets being tested by our joint venture partners that we have a 30 or 25% retained interest in, exposure to your base metals and your battery metals through the joint venture with Lake Mackay. And add to that the existing 1 million ounces of resources. Right on the money. That's in? Yeah, to schedule.
Sorry about that. You snuck in that last slide without me. I was answering something to Jackson up the back, who was just sending me through a quick text on behalf of everyone here. Thank you very much for that, and good luck for that next little bit of discovery too. It's been an interesting ride for you the last 12 months, so best of luck in the future.
Thank you.
Good on you, mate. Cheers. Please put your hands together.
Thank you very much, Chrissy. And thanks to Stu and thanks to the Vertical Events team. It's always a pleasure to be here and talk. Just a quick update on Musgrave. I know it's close to the end of the day, so I'll keep it relatively brief, but hopefully exciting for everyone. Forward-looking statements, less exciting. Really targeting major high-grade systems and near-term production. In Kew, we've got 600,000 ounces in the current resource base. We've got 28 kilometres of strike. The resource does not include the new discoveries we've made at Starlight and Whitelight over the last few months. We've had some slight delays, increasing our drilling program, doing more metres than we initially intended due to the fantastic results we've been getting at Starlight and then the new Whitelight discoveries. That will delay our resource back to October. Some of the near-surface hits, you can see 31 metres at 44 grams. And we're talking about really high margin ounces. So We're not talking about huge deposits here, but we're talking about really nice high margins. We've also have an earn-in with Evolution over part of our ground. That's not where we hold the current resource base or the new discoveries, but it's an 18 million JV funded over 5 years. We've got nearby third-party mills. There's 5 in very close proximity. And really the analogue for us is a system-type approach that hosts a couple of million ounces. And Great Finger is 30 kilometres up the road. It's multiple deposits over that, creating that 2 million ounces at around 10 grams. This is where we're located, about 40 k's north of Mount Magnet. You can see some of the gold there in one of the chips at Starlight. That particular sample went about 8 ounces per tonne and sitting roughly about 5 vertical metres below surface. So fantastic grades, very close to surface, covered by about 3 to 3.5 metres of what we call hard pan, so consolidated clay, just over the top, disguising it at surface. Just as far as the corporate overview goes, you can see we're about a $280 million market cap at the moment. We trade roughly on average 7 million shares a day over the last 3 months. Major shareholders, as you can see. But yeah, the price graph is interesting in that the Starlight discovery, you can see the flat line after the discovery where we made at Starlight. Fantastic results. The market sort of took about 3 months to catch on before we really hit the straps. And all through that phase, gold price was continuing to escalate. The relationship of Starlight to our existing deposits can be seen in this image. So right up to the northwest, you've got La Lena deposit, 300,000 odd ounces at around 2.3 grams. Break of Day in the orange and red lines running in that northeast direction, and then Starlight at a high angle to that. So either a link structure or a branching structure off the Break of Day main mineralised system. We've stepped out further to the south, about 75 metres, and made the white light discovery. You can see that second purple line. At the moment, we're stepping out further to the south as well, testing again for repeats. We think the real upside for us is additional discoveries. We think really this has changed our perspective on the belt and the opportunity to make new discoveries within this belt along the lines of what we've seen at Starlight. So it's a fantastic team effort. All discoveries are generally team built, great interaction within our team, and that's led by Glenn Martin. So thanks to all those people within the team that have made to this discovery. You can see there the Starlight lode cross-cutting that northeast trend of the Velvet and Twilight lodes at Break of Day. The green lode there is White Light off to the south, again at quite a high angle to that stratigraphic trend that heads in that northeasterly direction. Some of the grades maybe not that obvious from the back, but you got 14 metres at 190 grams, sitting about 4 metres below surface. 77 at 13, again, sitting at about 4 or 5 metres below surface. So the important thing, again, is talking for us is about margin. So you're talking about the highest grade, the softest dirt, just below the surface. You can see some of the intervals there. They've just highlighted on the left-hand side of that image, and a couple of cross-sections. In some places here at Starlight, we see multiple lodes. So that's 77 metre intersection at 13.3 on one of those cross-sections right near surface, again 3 metres or so below surface, made up of 3 high-grade components within. So the intent really is to get to a point where we can mine a significant amount of that open cut and then optimise it and mine the high-grade components within those lodes underground. So obviously, as we head towards feasibility, that'll be decided by the engineers as they optimise the deposit. So again, this is a relatively limited strike. Most of these zones, White Light and Starlight discoveries, are about 110, 115 metres of strike. So not excessive, but again, a large number of ounces in a very confined area and great for mining. A long section at Starlight. You can see the vertical continuity of the deposit there. At the moment, best grades near surface, again, a bonus. We've had some weaker grades as we go at depth, and we're just looking at and drilling further down dip at the moment to see where this might come back in. And with most gold deposits, you do get some variability within it, but you can see some of those numbers, again, quite small to read, but again, we've seen them on the previous page. So We're still waiting for about 25 to 30 holes to come back with assays. We're expecting those back over the next 2 to 3 weeks. And again, they will then go into the resource that we're hoping to get out by late October at this stage. So following on the back of Starlight, we had the White Light discovery sitting at about 75 metres to the south. Again, White Light now is about a single vein, but again, some good numbers in there. You can see 6 at 48 within that, and over a strike length of, again, about 100 metres. At the moment, again, we're stepping out further to the south and looking for repeats of that. What this has done is really opened up opportunities within the belt, and again, most of the team are exploration focused. We're passionate about exploration, and then inputting what we've learnt from Starlight back into the regional setting. This is a gravity image, so we integrate gravity with magnetics, geochemistry, geology, existing drilling, and have come up with a number of targets within the belt. So these targets, we think, have synergies to what we've seen at Starlight in the geophysical and geological data, and we're testing those now. So we've got a 10 to 12,000 metre combination of air core and RC happening, testing these additional targets. And the intent, obviously, for us is to continue to build the resource base, and we're doing that by drilling. So ideally, going forward, we build the resource, we head towards feasibility, and continue to explore while we're doing that process. The met work we've seen from Lena and Break of Day has been exceptional, 96, 97% recoveries, high gravity component recoveries as well. The samples are currently in the lab to get met test done, work done at Starlight, and we're looking forward to those results coming through in the next month or thereabouts. So at this stage, we don't see anything deleterious in it. There's nothing negative. It all looks fairly standard processing. But again, we're doing that work at Starlight to see if that conforms with what we've seen the rest of Break of Day. Another key component of what we're doing and where we are is the location. So we're in a WA, we're in a well-known mining and exploration district in the Murchison, second most prolific gold district in WA. You can see infrastructure is relatively good in the region. We're pretty much only 3 kilometres off the main Great Northern Highway. The areas in purple are the Q project. You can see Break of Day and Lena. Yet to obviously get into resources, Starlight, as I mentioned, but quite a lot happening around us in the district. Ramilius to the south, Westgold to the north, Dalgaranga out to the west, and obviously Silver Lake and Deflected down to the southwest. At this stage too, within the Yilgarn, diesel prices are relatively good, so moving dirt, especially high-grade dirt in the Yilgarn, is very competitive. We also have the joint venture with Evolution. So it's an 18 million JV over 5 years. Evolution had the capacity to earn 75%, spending 4 million in the first 2 years. They're into the second year of that JV, so they've committed to another 2 million over the next 12 months. We have a rig out on the lake at the moment, drilling as part of that joint venture. Some really interesting numbers come out of the last program on the lake. We've just started the new one and looking forward to getting results flowing through from that over the next few months as well. So there's 20,000 metres of drilling there happening as we speak. The schedule and work plan going forward, soil geochem, geophysics, good aids in the discovery process, and really a fundamental to the basis for what we do, getting good data. RC diamond drilling assays we're still expecting for Break of Day and Starlight and White Light over the next 2 to 4 weeks. Resource update for Starlight in late October. The EVN, so the Evolution joint venture, is continuing, big program as I mentioned there. We've also got a regional program, 10 to 12,000 metres, as I mentioned, happening at the moment, looking for Starlight analogues on 100% ground. And then we'll start drilling targets we have developed too at Mainland, our other project in this Q district. And on the back of that, obviously, we're wanting to run into development studies to look at the economics and feasibility of what we've found to date. The background to it all, resources, building the resource base, fantastic grades, good met recoveries, infrastructure, excellent exploration upside, and the opportunity we think that exploration can bring again to the project. all looking really good for going forward. And if you look at the background to it, Aussie gold price is really strong, and the potential for increased M&A in the space is fairly solid. So all in all, we think it's good investment criteria moving forward, and an opportunity in the gold space in Western Australia. So thanks very much. Happy to finish there, Chrissy.
Thank you, Chrissy, for that introduction, and thank you everyone for staying back to listen to an update on the Image Resources and our Burnanarring Mineral Sands project. I realise it's pretty late in the day. You're probably staying for the cocktails, but nevertheless, I'll take it as a positive. I'd also like to thank those of you, if there are any listening still online, and particularly those over east who might be still listening online. Definitely deserve a round of applause, those people. And a special thanks also to Gillan McLaughlin, who didn't schedule an AFL game tonight, which is probably a bonus from my perspective, otherwise there'd been nobody here. I will take you through this quite quickly, so if I don't cover something you wanted to hear about, feel free to drop by the Image booth. The usual disclaimer on forward-looking statements, which you can read or not at your leisure. I'm guessing not. Image Resources has recently established a mining operation in the North Perth Basin with the development of our Burnanarring Mineral Sands project. The $52 million capital construction was completed on time and on budget, which is, again, something you don't often hear in the mining industry, in a little over 6 months, and reached nameplate capacity in only its second month of operation. In 2019, our inaugural year of operations, we generated revenue of $146 million and EBITDA of $73 million. A picture paints 1,000 words, so rather than listening to me for the next 12 minutes, I thought it would be worthwhile playing a quick video. Sorry, now you have to listen to me again. I apologise for that. Our 100% owned Boonerang project is based on a very high heavy mineral grade of almost 9%. Combined with high zircon grades at over 27%, with zircon providing around 80% of the revenue. The ore is coarse-grained, which makes it easy to process through our 500 tonnes per hour wet concentration plant, resulting in very high zircon recoveries, and as shown in the video, our HMC is very coarse-grained, which results in easy separation and good final product recoveries for our customers. The Boonerang operation is quite simple by mining standards. Standard open cut mining, processing is through a standard wet concentration plant with no harmful chemicals. Our HMC product is then trucked to Bunbury and stored before being loaded onto ships bound for our customers in South China, where off-takers separate out the contained products, mainly into zircon and ilmenite. In terms of corporate snapshot, we have 980 million shares on issue and a market capital of around 200 million at around 20 cents a share. Our cash on hand now exceeds our debt, with shipments accelerating in the current quarter. Now looking at the mineral sands markets, the pricing of our HMC is based on underlying prices for zircon and ilmenite. The zircon component in our HMC is separated out by our off-takers, with the primary use being in ceramics. Australian zircon prices were very strong through 2018 and remained relatively stable through most of 2019, but premium zircon prices have declined around 15% since Q3 2019. Even at these lower prices, our Boonerang project is generating significant profit and cash flow from a relatively modest initial capital investment. Titanium, or TiO2, in heavy mineral concentrate currently represents less than 20% of our revenue. In terms of titanium and ilmenite prices, this sector of the market was a bit later to the party than zircon, with prices not really starting to take off until mid-2019. And whilst prices have declined slightly during Q2 and Q3 of 2020, ilmenite demand remains very strong against the backdrop of limited global supply. The TiO2 content in our HMC is separated out and is mainly used in the manufacture of paint, paper and plastics. But TiO2 can also form a titanium metal used, for example, in aircraft and vehicles. In terms of operational performance, our 500 tonnes per hour or 3.7 million tonne per annum nameplate capacity wet plant has been performing above expectations, with not only very high recoveries, but also availabilities consistently above 90% against the target of 85%. High ore throughput rates combined with increased ore grades has resulted in increased HMC production in first half of 2020 of 167,000 tonnes, compared to 135,000 tonnes for the same period last year. Stock levels, however, have built to over 100,000 tonne of HMC, or approximately 4 months production as a result of delay in sales during Q1, driven by the uncertainty created by COVID. We expect to reduce stock levels to around 50,000 tonne in second half of 2020. This next chart is worthy of some explanation. The yellow line represents HMC production, and this was relatively steady through 2019. But as we moved further north within the Boonerang project, grades increased significantly. Combined with higher plant throughput rates, this has resulted in significantly higher HMC production in Q1 and Q2 of 2020, around 83 to 84,000 tonne per quarter. As the cost structure at Boonerang is relatively stable, unit costs have dropped in the past 2 quarters, such that the revenue to cost ratio is well over 2 to 1. Cost per tonne did increase slightly in Q2 compared to Q1 this year, but this was due to additional logistics costs associated with us actually shipping more material, which is kind of a good problem to have. In addition to increased HMC production, we have also seen lower costs in a number of areas during 2020, including mining, logistics and administration, both at site and our Perth office, partly due to the lockdown, obviously, in terms of administration costs. As just described before, Image has high quality reserves in terms of grade, but current reserves at Boonerang only give us a remaining life mine life of around 2 to 3 years. Although we're working on expanding this, and I'll cover this in a moment. Once Boonerang mining is complete, we plan to move the WCP approximately 70 kilometres north to Atlas, where we have another 3 years of reserves, with potential for further expansion at Atlas and the neighbouring deposits Hyperion and Helene. Generally to date, COVID has had limited impact on our operations, as Chrissy said. However, the key impact in 2020, or first half 2020, and mainly in Q1, was a delay in shipping, with China slow to ramp up production post their new year. So the image shipped only 109,000 tonnes in the first half. However, since about May or June, demand has been increasing, and we remain on track to ship at our target rate of 90 to 100,000 tonne in Q3 and Q4 respectively. This keeps Image on track to meet 2020 guidance of 300 to 330,000 tonnes sold, despite the significant challenges thrown at us this year. We've talked a bit about this, but whilst we're getting Atlas construction ready, we're also focused on expanding the reserve base at Boonerang, with a significant amount of time and effort going into exploration for more ore within economic pumping or trucking distance to the WCP. The map on this slide indicates the key area of potential reserve expansion at Boonerang, with the current focus being on areas to the north, where high-grade hits were announced some time ago, and other areas to the west of the main Boonerang strand lines. To advance this work, we recently purchased 2 more tracts of land covering the northern extension and northwest extension areas. As well as our existing operation and exploration targets at Boonerang, Image has a portfolio of other projects, with the size of the bubbles in the chart shown representing the amount of contained heavy mineral. Dark blue prospects are expected to be mined through dry mining, whilst the light blue are dredge prospects. These projects and prospects are perhaps better illustrated in the following pyramid charts. As described previously, we have a minimum of 5 to 6 years of dry mining reserves at Boonerang and Atlas, but with a number of options to extend these projects. At Boonerang, as well as the potential to expand reserves to the immediate north and west, there is also the potential to pump or truck ore from Gingin south and Gingin north. For Atlas, there is the potential to increase mine life by pumping from the nearby deposits Hyperion and Helene. In addition, Red Gully and Reagan's Ford provide an option for a future WCP location. In addition to our dry mining projects, we have a number of dredge mining projects on our books, which provide an option for a second operating centre. The primary focus at the moment is on Bidamina, but Titan, Telesto and Calypso also provide an option for a second dredge operation. On a different tack, the construction of a solar farm at Boonerang is basically complete, with the first power expected to be generated within the next month. Whilst not providing a significant cost saving, renewable energy in terms of solar is expected to provide at least 25% of our electricity requirements for the remainder of the mine life. Image also has a strong community engagement and supports a range of community initiatives. And in addition, around half of our workforce is locally based. I'm getting the big red light now, so I'm going to get told off in a sec. So wrapping up, in summary, we've had a successful first year of operations, with calendar years 2020 and 2021 shaping up to be even better. Amongst other things, right now we are targeting an increase in reserves at Boonerang whilst getting Atlas construction ready. And given our strong cash build, we're looking retiring our remaining debt early to leave the option open for an inaugural dividend in the first half of next year.
Thank you very much. John McAvoy, everyone. Would you please put your hands together?